I did something crazy and invested $20,000 in this one particular stock. Here's why this stock has the opportunity to double or even quadruple over the next 36 months. You're definitely not going to want to miss out on this video in order to understand why investment opportunities such as this one don't come around often. If you want to learn how you can potentially make money off of this stock, make sure to watch until the end of the video in order to get my full detailed breakdown and why I personally believe this is a great investment opportunity. Before we get started up, lots of research went into making this video, so make sure to hit that like button and subscribe to stay updated with my latest videos. Getting into it, the stock that I invested $20,000 in is none other than PayPal stock. PayPal stock was once trading for a price of $308 per share, and since, the stock has plummeted 80% to around $60. In my opinion, this stock is massively undervalued, and this is where we as investors have an opportunity to make a lot of money. As of today, my PayPal investment is valued at a little over $20,000. My average cost per share is $60.76 with an overall gain of 0.71%. To keep things simple, I'll be providing my two scenarios for this company. This will be my base thesis and my bull thesis. The base thesis for this stock is the most realistic probability that can potentially happen for this company. My bull thesis is a very realistic outcome, but with a little more optimism in terms of companies' financial growth rates. I'm not going to be conducting a bear thesis for this video. Personally, I don't believe that this stock has much downside in terms of where it's currently trading at, and I probably wouldn't even have invested any money if I believed that there was a strong case for a bear thesis. Look, there is this very interesting scenario about PayPal. It's being compared to what Meta did almost 2 years ago. Similar to PayPal, Meta stock significantly increased in price, reaching an all-time high of $382 per share before crashing down to $80 per share. Since the crash of Meta stock, it's quickly recovered from its 52-week low of $80, and it's almost back to $300 per share at the time of making this video. This means that theoretically, if I invested $20,000 at the time of Meta's initial crash, my initial investment would be valued at over $70,000 today. This is very important because investors believe that PayPal will have a very similar recovery to Meta stock. PayPal is one of the most incredible companies in the stock market due to being able to consistently increase company revenues year after year. Over the past 5 years, PayPal has been able to double company revenue from $14 billion in 2018 and recently reported annual revenue of $28.5 billion for 2023. That's a huge revenue increase over just a 5-year period. Not only does this company have one of the best business models you can find, it trades for a forward price to earnings ratio of about 12. Personally, I find some of the best investment opportunities with companies that have forward price to earnings ratios trading between 10 and 25, with 10 being considered a great value of what you are paying for per share, and 25 leaning towards being a little bit more expensive in terms of its projected value. Jumping straight into it, for my PayPal base thesis, I have company growing top line at about an 8% return per year. This is a very realistic growth rate based on this slower economy that we're currently in. In this thesis, we would be assuming that PayPal posts decent numbers from their multiple businesses. Number one, obviously being PayPal, Venmo, and Braintree. This is all without PayPal introducing any new services or products. They have a very strong business with the current companies they own. I base these net income values with the company being able to sustain inflation issues, and due to PayPal showing that they've been able to grow their earnings per share at a faster rate than company revenue. I also factored in artificial intelligence playing a role in helping PayPal create better services for their business customers and retail customers, ultimately helping PayPal keep their business under control and creating a higher bottom line profit percentage for PayPal. If this company is set to grow revenues from $29 billion to $39 billion, a $10 billion increase over 5 years, you want to make sure that most of that money is hitting the company's net income or bottom line. In my base case, I don't have PayPal reaching over a 20% net income margin. I have them at almost an 18%. In 2027, PayPal should definitely reach over a 20% net income margin, but I wanted to keep this thesis as conventional and realistic as possible. Just a heads up, obviously PayPal is not going to continue to post a set growth rate of 8% return per year, nor a net income of 16%. These numbers tend to fluctuate. I tend to use consistent numbers in my projections because it keeps things simple and it's almost impossible to control outlier events such as geopolitical issues and economic recessions. Now, heads up, because this is my favorite part of the video. The risk-reward ratio with PayPal stock can get pretty crazy. If PayPal is able to produce an 8% top line per year on average and a bottom line of 16% return on average, this will value PayPal at a high 20s, potentially even a 30s or 40s price to earnings ratio. Even if PayPal is valued at a 20 PE ratio, this will mean that PayPal's market cap will be around $145 billion. This increase of over 119% would initially over double your current investment due to PayPal's current market cap being $66 billion. That is literally the worst case scenario in my base thesis. So if the worst case scenario in a base thesis implies me doubling my money, I'm definitely making that investment. But honestly, PayPal is more likely to be at a 30 or even a 40 price to earnings ratio, with these numbers being valued between a $217 billion and almost $300 billion market cap. In this base scenario, I would see over a 400% gain on my initial investment, valuing my shares at over $100,000 of profit. I hope you're starting to understand why it's pretty clear that this company makes such an attractive investment at its current valuation. The risk to reward ratio of this stock is just too good for me to pass up and not swoop in and buy as many shares as I can while I have the opportunity to do so. Now let's get into my bull thesis, and I have to make this clear, this is not even crazy or unrealistic. I have PayPal growing revenues at an average of about 10% over the next 5 years. 10%. This is not even an aggressive growth rate. It's very possible that PayPal posts a higher growth rate on average. When conducting this thesis, I used optimism in a realistic manner in order to create a very likely investment thesis. My bullish thesis assumes that PayPal does not financially suffer due to inflation over the coming years. So in this case, PayPal never adds any additional products or services to their current line. They simply continue to perform at a high level with the current businesses that they own, those three that we covered, obviously PayPal, Venmo, and Braintree. In terms of economic health, PayPal would be in a slower economy throughout 2023 and 2024, seeing improvement between 2025 throughout 2027. So here's the interesting thing. I kept going back and forth when computing my calculations and conducting my analytical research for this video, and maybe I'm being a little bit too safe in terms of the numbers I have projected, since I have the company only growing at a 10% growth rate per year. This would place PayPal's revenue above $42 billion by 2027. Here's why this is very interesting. If we look back to my base case scenario, I have PayPal near an 8% average growth rate. The difference between my base and my bullish case scenarios in terms of growth rate percentages, it's definitely substantial, mainly due to the power of compounding over the coming years. I have my net income average at 18% per year in my bullish case, which would place it at about $8.1 billion of net income in 2027. If you take a look at my net income margin for my bullish case scenario, I still don't have PayPal at a 20% income margin. This is what I meant by conducting a very realistic bull case scenario. So basically, if this company has a growth average of 10% along with an average net income growth of 18%, this will place PayPal stock anywhere between a 30 to 40 PE ratio. In 2027, that puts us between a $247 and $329 billion market capitalization. Remember, PayPal is currently trading at a $66 billion market cap at the time that I am recording this video. That would be massive growth in terms of my bull scenario. And I have to continue to iterate. I'm not going for a best case scenario. I'm going for a good and realistic outcome. I hope you guys are starting to understand why I believe this stock makes such a great freaking investment opportunity from my point of view. I don't want to say that this is essentially free money, but it's looking really good based off of my research. There's definitely been instances where I considered myself being too safe or too conservative in terms of company valuations, but I've been investing since I was 18, and naturally over the years, I've been inclined to be more realistic with my predicted valuations for two reasons. The first reason is I've been able to set an idea of what type of financial gain to expect when investing in a company. That way, I can be realistic with myself and not be disappointed by the performance results. The second reason is that this is an excellent way for me to mitigate risk. Let me explain. Now that I've grown my net worth past the six-figure mark, I have to be very careful and conservative of where and how I invest my money. I'm always looking for the next investment opportunity to increase my net worth by an additional $50,000 or $100,000. If I overestimate the predicted return I can receive from an investment, I can end up losing a lot of money. This is literally Warren Buffett's #1 investment rule to live by. Never lose money. The more research that I conducted on PayPal's financial metrics in order to make this video, I literally kept going back and forth with myself and asking if I should continue to buy more stock over the next 6 months. Then again, there's always the possibility that I may be wrong. The company could end up shrinking in terms of revenue and market capitalization. But based on my research, there's no reason to believe that a company's decline in growth is the most likely scenario. I hope you all enjoyed this video. Make sure to do your own research before investing into anything. As always, make sure to like this video if you took away any value and subscribe to the channel to join my online community. Let me know in the comment section down below if you plan on purchasing any shares and what you personally think of PayPal stock. Thanks for watching, and I'll see you guys later. Peace.